Hello, traders. Gary Wagner here, approximately 11 a.m. in Honolulu. It is Tuesday, the 25th day of October, and this is the daily report for gold and silver. In an incredible showing today, we have the metals up substantially across the board. Gold breaks 1700, currently trading 1704, 1705. That's putting it up over $50 on the day. $1.50 higher on the silver market. As you can see, when we look at that, that's well over 33, currently trading at 33.20. You know, we talked about the fact over the last couple of days that it was my belief that we would see gold once again reemerge and move above 1700. I didn't think that that would happen as quickly as it did. But absolutely, we've got the kind of move that we have been anticipating and waiting for. Let's get right to the board and see what activity we're looking at. First of all, stocks are under pressure. There can be no doubt. This is a 60-minute standard candlestick chart. You can see the top that it hit. 1260 comes down. Currently, it closed at 1228.93. When we look at the dollar index, it does appear as though the dollar, which has been falling as of recent, has found some sort of a tentative bottom, and you can see it right here, 76.44. And that brings us to the metals and really the commodities across the board, because what is happening on two fronts. First of all, let's talk about inflation. And this is according to Bloomberg, but inflation right now is peaking in the U.S. as most prices tumble. And what it talks about is what we were talking about yesterday, and it is that Standard & Poor's GSCI index. That's the 24 commodity basket. And that was really, really bearish throughout the last 4 months. And we are seeing that has begun to really change right now. And we're seeing a rebound that's caused the consumer price index itself to climb. And when we look at the metals here, I want to start with the different areas of resistance and what I'm looking for in terms of gold and silver. First, let's go right to gold. As you can see in the gold market, we were talking about a critical factor, that's 1680, and it just really literally flew through that particular area. We also talked about the fact yesterday that we had a very, very strong double bottom. There can be no doubt. We've got that double bottom. We've got that support at 1600. So what's our real next level? Well, we've got a couple of levels, but the real next level that I believe this market has an opportunity to take out is 1725. Now, realize, traders, that I am basing this on some fairly straightforward Elliott wave forecasting techniques by implementing Fibonacci ratios. You've got your final fifth wave up, your A, B, and C. And so typically what we're going to do then is that this A, B, and C is an intermediate wave count. And the actual wave count, this would just be A right in here for your major wave count. And that's what we're looking at. And typically on a major wave count and on a wave, you will get your B to be roughly 50 to 75% that of that move. And that's where we get this particular band right in here, 1725 to 1827. And so you can see that this is the range that this particular rally has the ability to move to. So is there still more time in the rally? Absolutely. I was hoping to actually issue a recommendation on a dip. We didn't get the dip, and we got this breakout today. Hopefully, many of you traders I know are long already. I've talked to quite a few of you. And for the ones that are looking for entry points, you can begin to scale in pretty much at any point. You're going to want to keep your stops at around 1780. If you want to do an options play as we did last time, you would be looking at a put option. There's not much time left on the December. Those will expire third week of November. But you, in terms of strike price, probably $16.95, $16.90, depending on the premium that's being charged. Let's go to silver, because silver is most interesting also. Silver is really broken out, up 5% on the day, and it is an incredibly, incredibly strong market. And here's what we're looking at. I've got a basic daily chart up. That daily chart has two different Fibonacci sequences. This first sequence is coming from the record high, $50, down to this low at $26. The second Fibonacci ratio is coming from this $44, the secondary high, down to the low. And what we want to look for is what I call Fibonacci harmonics. They are points in which you get both cycles, although at a different sequence, coming up with that same information. And you can see that there's really 2 points that you get that type of activity. What do I mean by activity? Well, what I mean is here you've got a 23% fib retracement, which matches up to the top of this market. Interesting, right? 61% here and 50% here. So these are your harmonic levels, because if you notice, this doesn't match here. The 76, 76, 61 doesn't match up with anything. This 50, this 38, nothing matches but these two areas. These two areas are critical areas. So where do I think silver is going to go? Well, I have to tell you, traders, at this point, I believe that we are going to be looking at $35 silver. I think $35 silver is fairly likely on a technical basis, and as I said, that's based upon Elliott wave forecasting tools along with Fibonacci harmonics. And for our final day of the chart, I want to look. This is a 240-minute chart. It is in Henkin Ashi format, which means that it's a Japanese average format. Let me go ahead and line these up the way that they should be. And what you're going to see is we've got a couple of areas, but look at the strength over the last couple of bars, these candles here, how strong they are. Of course, they're lacking the tail, but do you notice how this length has really grown? What that tells me is that we are in for a significant continuation of this rally, because when you look at these markets, it will be at the top where you get these long green candles, but you get them all the way up also. And as you can see, that whenever we have these really strong rallies, they can be defined by the fact that these Henkin Ashi candles are very large in terms of the average distance or range, as well as an absence of wicks. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.